You are watching TheoTrade. My name is Don Kaufman. It's May 21st, 2016. You're watching the weekend update. I'm going to kick it off with looking at this past week in the S&Ps and the broader markets. Then we're just going to forge forward and look to see what we have coming this next week and really what you can kind of expect and what I see inside of the markets. First and foremost, let's just zoom in quite tightly here on the SPX. And again, many of you know, if you're following us here at TheoTrade, I look at the broader markets much more so than individual equity products. And that's ultimately because, well, broader market, the S&P 500, drives order flow to many of the individual underlyings. And I say many of them, vast amount of what I've got on my screen, everything from Amazon to Netflix to Tesla to Apple to Facebook. You know, again, these underlyings are being driven by the broader markets, by the S&P 500. With that in mind, okay, since mid-March, we've been in an extremely tight range, only really breaching kind of the downside of that range a handful of times, including, of course, this past Thursday. It looked like a big, ugly down day, only to see a rally thereafter. The reality, though, okay, and this is a bit unusual to see. Number one, when we look forward at a week, we don't necessarily look at technicals per se. You know, I'm not going to try to sit here and extrapolate what I think can occur out here. The reality is that this coming week, there's a tremendous number of market catalysts that are going to drive a huge amount of the order flow. And what that ultimately amounts to is this. There's announcements. There's everything from GDP out there to a couple of Fed speakers. And if you back up a little bit, this past week, there was quite a bit of conversation about the FOMC. Now, I'm not a big believer that the FOMC is going to make this drastic difference in interest rates, but it doesn't matter, okay? It's going to move markets. The threat and the possibility of raising interest rates is absolutely going to generate a tremendous amount of order flow to the market. And every bit of economic news that we get lately is rocking markets, and that's exactly what we saw this past week. Now, this coming week, we've got several Fed speakers out there. I mean, again, you know, where to begin? You've actually got St. Louis Fed President speaking in Beijing at 6:15 a.m., you know, Eastern time. That's on Monday. Then you've got 8 a.m., you know, San Francisco Fed President, you know, John Williams. Yes, the Fed President, not the conductor. He's speaking almost at the exact same time. He's at 8 a.m. Eastern time. And it just keeps going from there. Philadelphia Fed President, all right, is actually speaking on Monday night. But that's not all. We come into Tuesday. And on Tuesday, we've actually got, you know, new home sales at like 10 a.m. Eastern time. It's going to generate a lot of order flow. We've actually got Costco earnings coming out. When does that happen to be? Oh, that's going to be Wednesday. But wait, there's more. This coming week, it goes on and on and on and on. You know, you even have, again, another Fed president speaking on Wednesday. All right, actually, two of them speaking on Wednesday. And it just, as I'm saying, goes on and on and on and on about what can ultimately occur in the markets. And to round out the week, you know, talk about the possibility of volatility here. By the way, I didn't even get to all the Fed presidents that are speaking this week because, again, St. Louis Fed president speaks again on Thursday morning because, you know, he's got a lot to say. You've got another one speaking Thursday during trading hours. And then you've actually got real GDP, Q1, okay, which is the second time, but Q1 GDP revised coming out Friday prior to the bell. And that's why I start here on the SPX, because you want to talk about uncertainty. All right. Uncertainty is how many Fed presidents can we get in a given week? That's what we're going to see. Now, you would think that the market would be expecting this, you know, inordinate volatility. However, what do we have right now is that looking forward, and that's what option pricing in the SPX allows us to do. You know, there's times where you can look in the past, well, that's great, but if you want to know what the future holds, you got to look at expected moves. And what that really kind of amounts to, and I'll zoom in on it here, is the SPX now has a midweek expiration, which is a Wednesday expiration, and a Friday expiration. And each one of those expirations gives us, particulars about the market. Why am I explaining this today? Because I find this incredibly unusual. And what's unusual? Well, the fact that the 4-day options only have a $21 expected move. So why is that unusual? You look back at the previous trading week. Now, just going to look back for a second at the previous trading week. We're going to count the days over here, and we're going to look at some of the ranges. So bear with me for a moment. I'm telling you, this is worthwhile stuff, and this is what you can trade on right now. So here obviously is a range. Here happens to be a range. Here's a range. Here's a range. So here's 1, 2, 3, 4, 5 days over here. That's all of last week. By the way, last week, where did we end up? Absolutely nowhere. So we fell well within the expected move last week, and the last week's expected move was right around $30. The S&Ps didn't really move at all, except the ranges intraday are phenomenally large. We're not seeing ranges less than about 20 points. And even in one of the smallest days, which happened to be, Friday's range over here, we're still seeing 15-point ranges. All right, Thursday, again, Thursday was kind of Mr. Toad's wild ride, trading in 20-point ranges, 20-point ranges, 20-point ranges, 20-point ranges. Why do I find the volatility a little unusual here? Because it's pricing in a full 21-point range, right, between now and the Wednesday expiration. And yet we're seeing these 20-point ranges every single day being thrown off. Now, is this volatility wrong? No. What the market is saying, moving forward, is simply this. It's saying we might be volatile on an intraday basis, which is opportunity, and I'll get to that in a moment. However, the market believes we're going to be in a relative range, right? So right now we closed on the S&P at 2052. The market believes, right, that we're going to be in this relative range of up or down about 20 points. That only takes us, up here to the 2070 level, or down below we come in here to the 2030 level, and that is the range that's expected. Again, that's just between now and Wednesday. You want to talk about Friday? All right, the range is, albeit very slightly higher than that. And this is what you want to start to define if you're building trades. It doesn't matter right now whether you're bullish, whether you're bearish. Toss what you think out the window. You have to look at what the market is dictating, the risk to be. Because from here, all of your trades can make sense or not make sense. And let me give you an example. Lots of people like to go out and they'll hop into products like a Google and Amazon, and they're going to sell options premium. Well, I'm going to tell you right now, you can sell options premium. You can sell very, very short duration options premium. But the issue that we're getting right now in selling short duration options premium is the day-to-day volatility is going to rip you in half. All right. So what we're getting is huge ranges on an intraday basis, but ultimately the markets are still closing within a very tight, definitive range for the entire week. The opportunity that exists, and this might not be for everybody, but on a day-to-day basis, and this is an intraday basis, you want to be a net buyer of options. If you're looking at markets, especially on an intraday basis in this coming week, and think the markets are going to rip one way or the other, you buy that option. You got to get out of it though by the end of the day, because decay will eat you alive over here. I'm not telling you to buy options and hold them for a week over here. I'm telling you can buy and sell options on an intraday basis because you're getting these wild ranges, and you're like, well, so what's the real opportunity? Well, that's exactly what I'm going to display here. And I'll go back to the SPX. And the SPX, let me be very frank with you, this is not a product for everybody. However, let me just open up the 4-day options and give you a prime example of of really what I'm doing here is this, okay? The options that have 4 days remaining to expiration. Let's just look at the puts for a moment, okay? The at-the-money puts. Between now and Wednesday, that's got what? Monday, Tuesday, Wednesday. They're only trading for $9. Say only. Look, the volatility is really, really low. And the question you have to ask yourself, if the market's going to move down, you may have a directional bias, and I might have a directional bias, but if the market's going to move down, do you think it can move down more than $9? Okay, taking us down to like 2040? I do. You know why I do? Because I look back at the ranges from last week, and you know what, 2040? I mean, come on, we're all the way down here at what, 2025 at one portion of a trading day. Great, we closed back inside of the range, but for those of you that are a little bit more nimble, this is a ridiculous opportunity over here because, again, the implied volatility is pricing us to be within this very tight range, okay? And yet the opportunity is on an intraday basis, it's kind of what I call buy and bail. You can buy an option, bail out. And if you're wrong, well, hey, the risk is really defined. It's kind of nice. Now, if you don't like the idea of $9 at risk, I get it. That's when you go to a product like the spiders. And the spiders, what can you do in there? Well, there's a 6-day option in there. And here again, extremely opportunistic. You look at this and you almost have to do a double take. The spiders are trading at 205.50. You look at calls or you can look at puts. And for the entire week, now if you think the market's going to explode to the upside, I'm telling you, look at the at-the-money options. They're only trading for $1.40. You know, what's the worst that's going to happen? You lose $1.40. Okay? But do you think we can go all the way, for instance, and touch? By the way, if you buy an option for $1.40, you don't need the underlying at 205.50. You need it at 205.50 plus the $1.40 plus transaction costs. So you're going to need is trading at 207. Okay? But you got to ask yourself, what's the probability of getting to 207? So you come over here, the probability of touching, there's like a 60% chance. I don't know about you, but it's not often that you see volatility pricing in, okay, a better than like a 50-50 probability of touching over there in terms of breaking even. So the volatility is so inherently low that it's giving us an opportunity to be a net buyer of premium. And again, throughout the course of the week, this could change drastically as we move forward. Nevertheless, volatility, rock bottom. I'm not going to be a seller of options premium with 6 days remaining over there because there's no good place to go, meaning that volatility is so low, why would you sell anything with 6 days remaining when volatility is that rock bottom over there? The only thing that can go against you is what? Well, volatility can go up, okay? You don't know if, like, what GDP is going to hold. You don't know what one of the Fed presidents is going to say. There's durable goods orders midweek out there. You know, the oil report, which comes out every Wednesday, that's been insane. And the list goes on and on and on. I like doing trades, though, that are better than a coin flip opportunity. And when you look at buying an option and have a greater than 60% probability of making money on it, okay, this is a good thing. Okay, and that's the kind of opportunity that you want to set up for. So throughout the course of this coming week here at TheoTrade, and again, we always have some kind of theme, some kind of topic for the week over here, but throughout the week, and that is the week of May 23rd, we're going to be looking at the right strategy, the right risk reward. I don't like to be a net buyer of option premium, okay? But I'm never going to stand in the face of like volatility that's this rock bottom with this many news announcements coming out. The opportunity outweighs some of the risks out there. And you just have to have the right trading logic to take advantage of just that. One other, just quick heads up to you. Many of you, if you do like to sell options premium, listen, I'm right there with you. I'm a net seller of premium. You know, you look at my monitor tab and I'm usually $400 or $500 a day of theta, which is time decay. But, okay, one of the last things I want to tell you kind of in this weekend update, be relatively constrained in selling things like iron condors right now. I'm going to say this again. If you sell iron condors, and some of you are like, I don't even know what an iron condor is. That's okay. But if you do sell iron condors, control your allocation because right now we have been in an extremely, extremely tight range. Okay? These ranges can last very substantial periods of time, and I've been talking about these ranges. But when we stay in these ranges, people have tendency to do is they sell options all the way out here, and then they sell options all the way out here, and they just go, would you look at that? I made money 1 month, 2 month, 3 month, 4. On the 5th month, boom! The market is going to tear you in half. Got to be careful. Keep your contract size small and stay alive. I mean, this business, it's about live to trade another day over there. You got to learn how to pick up nickels and dimes in front of a bulldozer and not get smacked by the fact that the market right now is luring you in a low volatility climate. The opportunity right now happens to be on a week-to-week basis, be a net buyer of premium. It's called buying the gamma, and that's really going to be the theme this coming week here at TheoTrade. Join us all this week in the TheoTrade chat room. My name is Don Kaufman. We'll be back on first thing Monday morning in the TheoTrade chat room. Have a good weekend, everybody. Bye-bye.